Hey guys, it is Julie here with JT Wealth, and today we're taking a look at some great dividend stocks for the month of June. So let's get into it. Alright guys, welcome back and thank you all so much for being here. The month of June is upon us, so that means it's time to take a look at some great dividend stocks with ex-dividend dates coming up this month. That means you won't have to wait around long to start collecting that sweet passive income. That ex-dividend date is when you must own the stock before in order to be eligible for that dividend payment, so just keep those in mind. Now, there were a ton of great companies with ex-dividend dates coming up in the month of June, so it was really hard to narrow it down to just a few. So I'm going to try to go through these very quickly. I want to give you a good variety. We have a range of dividend yields, some healthy payout ratios, all coming from a variety of sectors. We're going to take a look at these companies, what it is that they do, those dividend details, and of course, how the analysts are weighing in on the stock's future on tip ranks. Now, just before we get into all of that, I want to give you guys a bit of an update on my life, as the month of June is going to be a little hectic. Me and my family are actually moving back to Canada. So today is the last day here in my current house. I have a temporary setup here going with some ring lights and stuff, so I apologize if the quality is a bit different. Before we hit the road to Canada, I also have an amazing opportunity to go meet the Tip Ranks team, so I'm going to be traveling overseas as well before a week-long road trip. So I'm going to still try to bring you some content throughout, but just a heads up that it is going to be somewhat intermittent as I'm going to be on the road a lot. But of course, I couldn't go without bringing you guys your June dividend stocks. So with that all being said, let's jump right in. Some of our stocks today have ex-dividend dates right at the start of the month, starting off with PepsiCo. Their stock trades under the ticker PEP, currently priced at $183 per share, with a market cap of nearly $253 billion. The stock is up 12% over the past year and just a couple percent over the last 6 months. Now, Pepsi is a brand known around the world in more than 200 countries, with their products being enjoyed more than 1 billion times per day. With roots dating back to 1898, Pepsi-Cola and Frito-Lay merged back in 1965. The company now is one of the biggest names behind some big brands and generated $86 billion in net revenue last year. PepsiCo actually just joined Dividend royalty, becoming a dividend king last year, passing 50 years of dividend payments. They pay a quarterly dividend of $1.26 per share for a current dividend yield of 2.5%. Their next ex-dividend date is coming up on June 1st for payment on June 30th. They reported their earnings report last month on April 25th, where they reported earnings per share of $1.50, coming in 12 cents ahead of analyst expectations and continuing their streak of earnings beat. Revenues came in at $17.84 billion. Following that, we had several analysts weighing in on the stock, and they are somewhat divided, with the stock coming in as a moderate buy. With 7 buys and 6 holds, their average price target is $197, which would be an upside potential of over 7%. And we can see that mix of holds and buys here, with the downside being our lowest rating of 3%, all the way up to an upside of over 12%. Next up on our list, we have the company with the golden arches, McDonald's. Their stock trades under MACD or MCD, currently priced at $286 per share and a market cap of over $208 billion. They've seen growth of nearly 16% in the last year, and that growth has continued in recent months. Started back in 1954, those golden arches are now known around the world in more than 100 countries with over 36,000 stores. Back in 2013, USA Today estimated that McDonald's sold roughly 75 hamburgers every single second. The fast food franchise is getting close to Dividend King status. They've been paying a dividend now for over 46 years. Their current quarterly dividend comes out at $1.52 per share for a current dividend yield of 2%. Their next ex-dividend date is June 2nd for payment on June 20th. They also reported earnings near the end of April, where they saw comparable sales growth of over 12%. Their earnings per share of $2.63 came in over 30 cents ahead of analyst estimates. And of course, that meant that many analyst ratings started to roll in. We have 28 current analyst ratings coming in as a strong buy, with 24 buys and 4 holds. With an average price target of $317, that would be an upside potential of over 11%. We can see our list of ratings down here. On the low end, we do have a buy rating whose price target has already been surpassed, and many of the other ratings coming in with some double-digit upsides. Third up, we have another well-known brand with Kraft Heinz. With a market cap of $47 billion, their stock trades under the ticker KHC, currently priced at $38 per share. They are up slightly at 4.5% over this past year, but down just shy of 1% the last 6 months. Kraft and Heinz were respectable names on their own. We have Kraft mac and cheese, Heinz mustard, very popular brands, but the companies joined forces back in 2015. And they are the parent companies of many other well-known brands, including Oscar Mayer, Velveeta, Kool-Aid, and Jell-O, to name a few. Each company had a fairly solid track record of paying dividends before they joined together, and since their joining in 2015, they have been paying a dividend, though they did have to decrease it back in 2019. It has been fairly stable ever since. They pay a current quarterly dividend of 40 cents per share for a dividend yield of 4.17%. Their next ex-dividend date is June 5th for payment on June 30th. In their most recent earnings report, they saw their net sales increase over 7%. They came out with revenue of $6.49 billion and an earnings beat at 68 cents per share, another in a long track of earnings beats. The Kraft Heinz stock currently has 12 analyst ratings, coming in as a moderate buy. That breaks down to 5 buys and 7 holds, with an average price target of $46, which would be an upside potential of 20% from current prices. Now, we do have a couple of holds, but still with some double-digit upside potentials, and on the high end, we do have a buy rating with an upside of over 30%. Fourth up, we have Main Street Capital. Their stock trades under the ticker MAIN, or MAIN, currently priced just shy of $40 per share. They are up nearly 13% over the past year, with growth of 9% in the last 6 months. Main Street is a principal investment firm. They primarily provide long-term debt and equity capital to lower middle market companies and debt capital to middle market companies. Their portfolio investments are typically made to support management buyouts, recapitalizations, growth financings, refinancings, and acquisitions of companies that operate in diverse industry sectors. What many investors love about Main Street Capital is that they pay a monthly dividend. Their next dividend is 22.5 cents per share with an ex-dividend date on June 7th. That gives them a current dividend yield of 6.6%. Their last earnings report came out on May 4th, where they reported revenue of over $96 million and had an earnings per share beat of $1.02. Now, their stock does only have 3 current analyst ratings and comes in as a moderate buy with 2 buys and 1 hold. The average price target is $44 per share for an upside potential over 11%. And we can see those 3 ratings here, both from 5-star analysts on the buy side, which is great to see, and 1 hold from a few months ago. Fifth on our list, we have our highest dividend yield of the day with Camping World Holdings. With a market cap of $2.3 billion, they trade under the ticker CWH, currently priced just over $27 per share. They are up 12% over the last year and up 8.5% the last 6 months. Camping World Holdings is America's largest retailers of RVs and related products and services. They combine a unique and comprehensive assortment of RV products and services with a national network of RV dealerships, service centers, and customer support centers, along with the industry's most extensive online presence and highly trained and knowledgeable team of associates. They currently pay a quarterly dividend of 63 cents per share, giving them a current dividend yield of 9.31%. Their next ex-dividend date is coming up on June 13th for payment on June 29th. The company reported their most recent earnings on May 2nd, where they came out with a surprise profit of 14 cents per share versus the expectation of a 3-cent loss. Their stock currently comes in as a strong buy based on 7 analyst ratings. That is based on 6 buy ratings and 1 hold, with an average price target of $30 per share, which would be an upside potential of 8.7%. Looking at our recent ratings, we have 1 buy rating with a downside as the price target has already been surpassed. The rest range from a slight upside of 1% all the way up to nearly 27%. And we are coming full circle with today's stocks, as this last one is the first company we talked about, Pepsi's biggest competitor. That is Dividend King Coca-Cola. With a market cap of $260 billion, their stock trades under the ticker KO, currently priced at $60 per share. Now, while they have climbed back from some big declines earlier this year, they are still down 2% the last year and a couple percent this last 6 months. Coca-Cola has been around for 136 years and is one of the world's most recognizable brands. They are the #1 worldwide in value in several categories, with over 30 million retail customer outlets. Along with their Coca-Cola brand name, they also have many others, including Smart Water and Minute Maid, to name a few. As I mentioned, Coca-Cola is a dividend king. The company has actually been increasing their dividend for 60 years. Their current dividend is 46 cents per share on a quarterly basis for a dividend yield of 2.95%. Their next ex-dividend date is June 15th for payment on July 3rd. They also came out with their latest earnings near the end of April, where they had a slight earnings beat and reported revenues of nearly $11 billion. The Coca-Cola stock comes in as a strong buy based on 14 current analyst ratings. They have 11 buy ratings and 3 holds, with an average price target of nearly $70 per share, with an upside potential of 15%. Those range from a couple hold ratings with upsides of 4.5% to buys with upsides of nearly 23%. So there we have 6 dividend stocks, all with ex-dividend dates coming up in the month of June. I know it was a lot to go through, guys, but like I said, there are a lot coming up this month, so it was hard to narrow down the list. Let me know your favorite dividend stocks in the comments down below. I always appreciate hearing from you guys, and please keep in mind these videos are never a suggestion to buy or sell any specific stock, just meant for some entertainment and information purposes. Please always do make sure you're doing your own research and due diligence. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you're subscribed to the channel as well. Thank you guys so much for watching. Have a wonderful day, and I'll see you back here next time.